There's a major rally on the way. Can't believe you. And if he's wrong, it's only because stocks will go even higher than he thinks this year. Let's bring in Julian Emanuel, Managing Director, Chief Equity and Derivative Strategist at BTIG. What was your 2018 target when you had one? Was it 3,000?
It was 3,000.
Did you change it to 2,750 for
No,
20?
no.
A lot of people did.
We did not take the week between Christmas and New Year's off. We sweated every moment of it. And then we came out and we said we thought the Fed was going to go to neutral. There were going to be no more hikes, and that the balance sheet would start stopping the roll-off in June. Obviously, that was validated to a certain extent. Now we'll see. But if you think about what you've been talking about the last 5 minutes or so, is this rally has been, probably more validated by the fact that inflation expectations have been rising in lockstep with the market. And that tells you that the cyclical bias is valid in a world where the short end is going to be held down. And actually, we think that in a lot of ways, because inflation expectations are moving up, and because European data has started to beat expectations, which admittedly the bar is exceptionally low, that you could actually see a rally in longer-term rates, which is going to be great for financials here.
And that'll steepen the yield curve and allay any recession fears that we still have. That I can't believe we still talk about that every day. It's like, is it going to be this year or next year? We hear that expansions don't die of old age, but we still think that once they get long in the tooth, that it's coming. Couldn't we be Australia for 25 years or no?
It may not be Australia, but there's no reason to think that the 10th anniversary of the expansion coming in at mid-year, that we can't get to 11. The fact is, you look at sort of the guts of the economy, jobless claims, lending, the ISM numbers, they're all off their extremes, but they're all still at relatively
3,000
high
is not that, I don't know whether it makes it worth the downside risk from here, but what is that, 7% from where we are? That's not that bullish, Julian. It's only March.
So look.
Could you see 3,200?
That's true. And to be perfectly honest, we're somewhat surprised ourselves at the speed of this rally. You could see a number like that. Here's a little bit of the math. Basically, think about it. The Fed has, by all rights, started to engineer a soft landing. That's what the tightening of financial conditions, then taking their foot off the rate hiking mechanism has been all about. The economy looks, even though first quarter is still soft, looks like we're coming in north of 2%. That's the kind of recipe that allows multiples that at $170 or $172 in terms of earnings gets you to a number like 32 or 3,300.
But Julian, I guess I hear you also talking about inflation in there, and I hear you talking about reflation trades. If there's inflation, does the Fed just shake their head at that? Because Steve talked about an environment where possibly people are underestimating the Fed's ability to come back into the equation. And if you see inflation, that to me is something that, by the way, I don't disagree with you, which is why I like these reflation trades.
Well, so what's interesting is that even though you could say that the Fed has won by virtue of the fact that inflation expectations are picking up, the talk is, and we may hear them talk about it more on Wednesday, this whole averaging up in terms of inflation. Mm-hmm. You could let core PCE, which is at 1.9 now, rise above 2% for a time being. And so that's the kind of environment, the phrase is running hot. That's how we get the continuation of the cyclical trade.
Julian Emanuel from BTIG, thank you. And you guys have to help me with this. It says, let's trade it. Does that mean you guys are going to start talking again?
Yeah, I'm afraid so.
Exactly.
That's what we do.
That's what happens.
We could use
the
time.
God.
Okay. But we only got so much time.
We have till 6, right?
We have, it's an hour
okay.
show.
All right. Why don't you start? Let's trade it. Let's trade it. So you're going to say,
well, you know what? I'm with Julian on this. I think in an environment like this, I don't think the Fed's going to be hiking rates, even if we get a slight uptick in inflation. For the exact reason that Julian said, they're already laying the foundation for inflation targeting or letting things run a little bit hot. In June, they're going to come out with a recommendation on what they should do with their policy. So now I've got a Fed that's going to let inflation go. They're not really that concerned about hiking rates. They're going to keep the 2-year and under lower. That's great for financials, as Julian said. The yield curve steepens. Unless the Fed comes in, and that is the risk. There's no question. The risk is the Fed becomes too tight, gets too crazy. Then you've got a problem. But until that point, you got to
don't hurt me.
What's going on?
You get the last word. That's what I was
My
told.
last word is I'm thrilled you're here. Tell Claire I'm apologizing.
What happened?
All our fans at home. Well, I was away with the family trip.
Spam? It's in your spam? She said months.
Go to spam.
She said months.
And then I was away a couple times days last week.
You don't have to come on.
Great TV.
Seymour would be great.
He brought it up, Tim.